Alrighty, welcome back to Weenie Trades. So in this video, I'm going to be talking about my top 5 stocks that are setting up buyable setups on the higher time frame for investing. So with these stocks that I'm about to be going over today, these stocks I feel comfortable with my own money being in them. They're fundamentally strong and they're more likely to offer pretty good growth over a long period of time than not. Again though, none of this is financial advice. These are just my opinions and analysis. The first stock that I'm looking to potentially buy is Medtronic, ticker symbol MDT. And Medtronic, it's part of the healthcare field, but what I really love about Medtronic is its nice, good, steady uptrend. You know, we're making higher highs and higher lows on the higher time frame. This is the weekly time frame, meaning each candle represents 1 week of price action. We're in a nice, good channel, making higher highs and higher lows. And lately, we're starting to just break out. Maybe the earnings could be the catalyst. But what I really love about Medtronic is not just the growth, but it's the dividends. Medtronic pays quarterly dividends. It's about 63 cents a share, which so if you buy, 10 shares, boom, there's $6.30 every few months on Medtronic. So really awesome. Chart pattern, we'll make this is a nice good little flag pop on the weekly time frame. So look for multi-weeks of Medtronic going up. We'll see how the earnings report is. Looks like there's no red flags on any of the earnings reports. And it's just a nice good bullish pattern that also pays dividends, getting exposure to the healthcare industry. The next stock on my list to potentially invest in is AMD. And AMD, we've got the PPMs curling up. So what does that mean? Well, let's just pull up like a good old MACD indicator. A good old MACD indicator. I don't usually use indicators, but there's just sometimes some good visuals. Well, as you can see, we got higher lows, but look, the higher lows were nice and controlled earlier. Now they're starting to get a little bit steeper. That's kind of like a curling, rising tide lifts all boats. AMD, part of the semiconductor industry, if we look at the higher time frames, just bullish. This is a monthly bull flag if I clear the drawing set. So we're kind of moving higher, and now we're going sideways. If we can move higher, we can expect multi-months of upside in AMD. And just to compare AMD to NVIDIA, look at this monthly bull flag. We moved up, we went sideways, and look what happened after just 9 months of sideways. Boom. We just got 1 month, 2 months. We're already 3 months up of just straight upside on NVIDIA. And I truly do think that AMD can follow. So I'm looking to invest in AMD, accumulate in this little area, and then add one last time just as we leave the exit doors on that train for AMD. Oh, and another quick note on AMD, if we just go to the higher time frame chart or just the weekly chart, this is kind of an ascending triangle type pattern. So we've got the flat top resistance, we've got higher lows. These patterns tend to work very, very well to the upside. So I'm definitely going to be keeping my eye out on AMD. Even if it pulls back, I'd love to grab more shares in the 80s, mid 80s area and see if we can get a tighter range before we break out. That way the breakout can be even better. Next up on my list is Upwork and UPWK. Upwork, nice, good uptrend. But what I really like about Upwork is that, people are finding fast employees. It's a site where you can just hire people and you can pay them per task. You can choose how you want to pay them, if you want to pay them per hour. Tons of different ways to structure. And companies are hiring employees fairly quickly. They can be good contractors, but nice, good growth in this name. The Upwork is a little bit more volatile, but on Upwork, we're getting tons of price target upgrades. If we look at the MACD, the moving average convergence divergence, we're starting to cross just as we were with AMD. So look for Upwork to potentially continue higher. If Upwork could, come into this $50 share area, I really do feel like that's a good value for a higher low pivot, and then I can add on the breakout. So Upwork, pretty interesting. Upwork is a little bit more volatile, as you can see, that's a 50% range, a little bit less than something like AMD or Medtronic. So this one's a little bit more volatile. So because of the higher percent returns, there's also could be higher percent losses. So because of that, I'm going to decrease my position size when potentially adding to Upwork on an investment. The next stock that I'm looking to add in is Google. And Google, you probably hear me talk about it all the time, but it's for a good reason. Nice, good, steady uptrend, higher highs and higher lows. Google's got a ton of growth going for it. I really do feel that YouTube's going to be a significant revenue source moving forward for Google. Last earnings report, they had an amazing report, and it was just a tough time in the market, so it sold off on that good report. But now we're starting to curl higher on Google. Looking for Google, now that we've already kind of broken out, looking to, I will nibble up here, but I'd love to buy Google. Anything above 2,400 keeps the short-term uptrend intact. Longer term, I like Google at any price. So this is a stock that I dollar cost average in. If you want to take a look at my M1 Finance portfolio that I started about a year ago, just adding about $50 weekly. So just about $50 a week can really help build up a nice good size portfolio. And as you can see, Google is one of my largest holdings. It is my largest holding on an individual stock basis. I do have other IRAs and stuff like that. But Google, nice, good, healthy uptrend, good growth. If you want to just quickly breeze through my portfolio, I like the QQQ ETF. That's my favorite ETF. Some would say that there's better ones. Some would say that there's worse ones. This is just my portfolio, and looking to expand in some of these companies when they reach good deals and good values over time. Lastly, in terms of top stocks that I'm looking to invest in, I'm looking at Amazon. And Amazon on the weekly time frame, similar thing. We got a flat top resistance, lots of resistance at 3,500. We got a flat bottom right at 2880, and we've just got higher lows coming into that flat bottom. Look for Amazon to potentially break out on the weekly time frame. If we look at the max chart, this is a tight monthly bull flag. So move higher, sideways consolidation, this is accumulation, and then if we start to leave, well, we can expect that the length of this flagpole can continue on higher, and that would put Amazon right at about 4,500 at least. I'm thinking Amazon should probably be at least about $4,000 by the end of the year, and probably about $5,000 by the end of next year. So Amazon, they make a lot of money, they make bank. We got the monthly bull flag, blowout quarter last quarter as well. So earnings report was really good last quarter, but it just happened to be that the market was a little bit overbought and it's decided to sell back in. Now we're starting to come back up at this level, and everybody's going to be talking about Amazon. If Amazon is absolutely ripping and exploding, that's the time where we're thinking as investors, oh, I'm glad I just got in. So that's kind of Amazon. And lastly, just as a quick note and a quick tip for investing, we can't be afraid of the boogeyman. There's always going to be a chance of a crash. So everybody's always kind of talking about, biggest bubble of all time, market crash. And what that does is it makes people not take any action. We can't be afraid of taking action just in case something happens. We just need to prepare for it. So how are you going to react in a crash? Are you going to sell everything? Are you going to buy more? What happens if the market does have a big downturn like it did during the virus crash? So think about that. Usually you need to have a plan, but here at Weenie Trades, I'll be able to sniff out a crash pretty quickly. I've been aware and ready for each of these market corrections, whether they be small as 3 to 5%, or they be large, 10, 20, 30%. So here at Weenie Trades, I'm going to sniff out the crash for you. You can also learn various hedging option strategies so you can make money in case of a market crash, in anticipation of it. You can collect income, you can collect premium. There's tons of different ways to profit off of different market conditions. And so you can learn that in my options course. If not, you don't have to. There's tons of free learning lessons and opportunities everywhere here at Weenie Trades and at Weenie Trades Live. But if you do want to invest in the course, be sure to use coupon code GOOGS, GOOGS, for 40% off. And on that note, be sure to hit like, subscribe, and share with your friends who are looking to get into the stock market and start investing. Let's get them started off with a nice, good experience. Again, none of these are financial advice. I'm not here to tell you to buy these stocks. These are just stocks that I find value in and I'm looking to invest in. So, thanks for tuning in. See ya.